Hello everybody and welcome to Project Trade. This is the trading highlights show, all of the exciting instances from our testing of trading strategies. Today we're on a predominantly technical indicator based strategy, but there certainly is a big touch of price structure in the mix too. And it's a reversal strategy that we're targeting, looking for when price momentum has exhausted itself to see if we can snag onto a return in price. There's plenty of reversal indicators out there. This particular strategy is starring the Williams percent range from Larry Williams. It's a momentum based single line oscillator which looks like this, and it's range bound with the highest possible reading fixed at 0 and the lowest possible reading fixed at -100. The indicator formula looks at the high and low of prices within the given look back input and compares those to the current closing price to see if price is overstretched in one particular direction. For us, we'll be using the typical default of a 14 period input as you can see in our settings. We've also got an upper level and lower level marked out to try and consistently determine when price is overbought or oversold. Typically, the levels are set by default at above -20 for overbought and below -80 for oversold. But we want a bit more reliability than that, so we're putting ours all the way at above -5 for overbought and below -95 for oversold. If you want more information on the indicator itself, video link description. But here, let's get to our entry criteria, which we're keeping pretty basic. When the Williams percent range value first moves and closes above -5, we'll assume the market to be overbought and enter a sell trade. And if price closes below -95 on the WPR, that's a signal to us that the market is oversold and we will therefore enter a buy trade. And that's it. Nothing much fancy to how we're entering the trade store, not even a filter to worry about. Here's a couple examples on a standard looking price chart that we could expect to see in the markets. That's our sell signal from the oscillator over there on the left hand side, with our buy signal coming over on the right when it first closes in the oversold territory. So simple that you might even be able to train a rat to do it. Well, they are pretty smart rodents, man. Yeah, the pigeons of the ground. That's why they call them that. We don't want to rely on the Williams percent range for everything though, and to help us with that, we can put a key part of our strategy into the money management. This is where that mix of price structure steps into the strategy. We're going to use Bill Williams' fractals indicator. No relation to Larry? I don't think. I suppose they could be, but Williams certainly isn't the rarest name on Wall Street. Anyway, relations or no, that bears minimal relevance to our strategy or our money management. Here's what the fractals look like, and they'll be highlighted on the chart with the blue shapes that look a little like those. They are a pattern where the highest high or lowest low of price is in the center of the 5 candles. So on the left with our bearish fractal, the highest high has 2 lower highs on both its left and right sides. And then just reverse that for a bullish fractal. That has the lowest low in price in the center of the 2 higher lows, again on either side of it. Video in the description on fractals for more info. But here's what they're actually looking like on a price chart. If you've never seen them before, then it may have sounded like the patterns are quite rare to occur, but you can tell from the chart that that is not the case. They do tend to make regular appearances. This is not a special scenario that we're showing you. We're going to use the fractals like this. If we're in a buy trade from the Williams percent range showing as oversold, then we're going to exit the trade at the close of the formation of a bullish fractal. Remember, the fractals need 2 candles after where the blue arrow will be before they cement themselves as true. It means that for us, hopefully the oversold signal coincides with the spot where the fractal arrow will end up being. We are essentially trying to foreguess where the fractal is going to be. So with a sell trade, we're going to exit it at the close of a bearish fractal. If the strategy nails the timing correctly, then we shouldn't end up in trades for too many periods. We're attempting to get in and out with quick profits. No stop loss or take profit in play at all. We're riding in fully on the fractals. That's a lot of faith to have in them for sure. But here's a couple examples of how we could expect to get out, just to show you what we mean. So this is where we'll be entering a sell trade right at the peak there where the WPR closed above a reading of -5, and we're exiting it at the closed formation of a bearish fractal, which we've circled here with another arrow pointing us to where in price we'd be shutting it down, as that's when the fractal forms. Pretty quickly out, but as you can see, we were able to catch some fast profits. Here instead, a buy trade on the same price chart. Entry point here where the Williams percent range is oversold, and we close the trade at the formation of the next bullish fractal, which is here. Interesting candle, by the way, way getting both a bullish and a bearish fractal from the same period, but there we go. It's a bullish fractal to us nonetheless. Not so many profits from this one. Remember, the arrow is pointing from the fractal, not from our entry price. It does look like we would lose a small amount from the spread of the trade on this one, as we do get in and out at a very similar price level. But those are the types of trades that we can expect as well to get. It's not going to be profits on every single trade. I wish. We still need to know how much we're actually going to risk on the trade though. And to do that, when we're entering a trade, we'll measure out the distance to the extreme point of the previous relevant fractal. So if we're going to enter a buy trade from an oversold signal, we'll measure out the distance in pips to the top of the last bearish fractal. Then opposites for a sell trade will gauge the distance from our trade entry position to the bottom of the last bullish fractal. However far that measurement is for either buy or sell trades respectively will be a risk reward amount of 1% of our capital. We don't want to go nuts on it just in case it does get out of hand without a stop loss. With our previous sell and buy trade examples, I've marked those arrows to show the distance that would be a risk measure of 1% of our money. Again, for that sell trade on the left, it's to the bottom of the previous bullish fractal, and for the buy trade on the right of the two, it's measured to the high of the previous bearish fractal. Should keep our capital safe at least. Now, even when the Williams percent range is up above -5 or down below -95, we still can't fully rely on it to get the entry spot on every time, but it's usually very close even if it's not quite there. So something we're going to do is that if the indicator stays in its overbought or oversold territory for 2 periods, then we will enter another trade in the same direction and with the same amount of risk as the first trade. That means if, say, we enter a buy trade at the close of period 0, then at the close of period 2, if the Williams percent range has remained closed in the oversold zone for those 2 periods, we'll enter that extra trade, doubling down on our belief in the return. And we'll do it for as long as it continues. We'll enter with the same risk at the close of period 4, period 6, period 8. Well, the list just goes on like this. I think they get the pattern. I'm not going to 1,000. That rule applies the same for if the Williams percent range leaves its overbought or oversold region, but then re-enters it and closes there again whilst we're still in our initial trade. It'll be another trade for us, same risk and same direction again. As long as we keep entering trades, we'll eventually be right about one of them. We're going to stick it on the 5-minute time frame, aiming to get a few trades out of it, join in with the scalpers. But those extreme readings of the Williams percent range don't come all the time every period. So we're going to double our chances for trades and get onto 2 currency pairs. It'll be the world's 4 biggest currencies in play as we trade on the Euro US dollar pair and the Great British Pound Japanese Yen pair, the guppy. And of course, we'll journal the trades for fair and accurate strategy assessment. Gotta maintain a record. But that's it. If I didn't explain the strategy very well, don't worry. We're going to get on the charts and trade it right now. Okay. Here we are in the charts. Got our 2 currency pairs pulled up. Euro US dollar on the left, Great British Pound Japanese Yen on the right. It is almost 5 to 11, and we can see just a couple periods ago on the Euro US dollar, the Williams percent range did close in an overbought value, -4.07. This candle here was the close. So if you got in around about there, it was looking good for you on the next candle. Not sure how that's going to finish yet. If price pushes up, this fractal here won't form. Meanwhile, the Great British Pound Japanese Yen, that does look as though it's going to go into a signal here. It's overbought right now, 96, 95, hovering there, might not close, but there's a minute until the end of the candle. So let's prepare ourselves for that in case we get the signal. So we're measuring to the top of the previous bearish fractal. It's actually quite tight, it's about 23 pips there. So it'll be at 1% risk to that area up there. Not going to be exact because of how price moves, but we do get the close here. So let's get into that buy trade. You can see exactly how that risk is calculated. And now we wait for the formation of the fractal. Looks like on the Euro US dollar you would have got the close, and because of the spread you would have lost a small amount. So not the best trade. Had looked promising off that move, but doesn't quite get there. Don't mind missing that one. We may get a sell trade. If this continues here, RSI, well, it's flirting around -5. The trade's looking okay. Couple dollars up at the moment. Don't need to set the take profit or stop loss. We are just looking for that next fractal to form, or the next bullish fractal I should say. We will have a look at the economic calendar in a minute, see what events we've got on today, if we can expect anything shaky. But first, let's just give it a couple minutes until 11 o'clock, see if this signal comes on the Euro US dollar, because if it does, we better get in the sell trade. And it does look almost certain that we're going to get this signal. Let's measure out that risk there, 9 pips, so quite a big amount of lots on this one. 0.63 is the number. Let's sell it off before it drops too much without us. Don't usually expect to get 2 trades like that right off the bat. Only been on the charts 5 or 10 minutes. You can see by the Williams percentage range how often it goes into that territory. It does happen, but we're already getting into that morning volatility. Don't want to see this climb now, want to see the retreat. And we are going to get the close of the fractal straight off the bat here for the Great British Pound, Japanese Yen. And let's close that as it confirms, and it does. And that turned out pretty nice. It went to a high, then receded back, pushed on though. It might continue to push, but we've made away with the loot there. $40.52 to start the day. A very nice trade. Let's just hope our Euro US dollar pair can do the same. Not looking so good at the moment. Did push on a bit. Didn't stay in the overbought territory because of how much it receded from the high. And we might see that continue. Just means our bearish fractal may appear up here instead. See if we can grab a look at the economic calendar while these charts crack on. A few bits and pieces happened already. We had Japanese retail sales month on month. That came in at actual 1.1% against a forecast of negative 1.6. Not too bad at 1.1, certainly beating out the forecast. The previous was 2.8, that was revised up from 2.7. But still, they'll be happy not to see the decrease there, and it does put their year-on-year retail sales at 0.9% against a 1.3% forecast. From Europe, in the Eurozone, Spain, CPI month-on-month, they've been struggling a bit with that. They had 1.6 previous. They were forecast another 1.3%, but it came in at 0.4%. Really nice for them to see that lessened. 0.9% less than the forecast. They could definitely do with that. 10:30, just about 35 minutes ago, we had a couple Swedish numbers. The goods trade balance came in a little bit better than expected. 0.8 billion Swedish krona against negative 2 billion forecast. And the GDP quarterly was up as well. 2% actual against a 1.8% forecast and a 1.8% previous. Not too bad, Sweden. Not too bad. But at 11 o'clock, just under 10 minutes ago, look at this number that's come in. PPI from Italy, Producers Price Index, month on month, 7.1%. 7.1, and that was against a forecast of 1.6 and a previous of 1.6, so it was already forecast to be pretty big. You get 7.1 every month, you're in big trouble. Even getting it 1 month, that doesn't look good. And if those PPI numbers do flood through to the CPI, that is not something that they want, especially when you think their interest rates controlled by the ECB. And Christine Lagarde, the president, has basically said no rate increases for 2022. Seeing some of these PPI numbers come in though. I think we saw a 3.8 for Germany in the last week or two. Or we will be able to see their CPI numbers though. They're coming in today as well, month on month, 3 p.m. So it's still a little bit away, but we'll watch out for that. And then half an hour after that, Canadian numbers. Current account, pretty standard. Industrial Product Price Index, the IPPI month on month, as well as the Raw Materials Price Index month on month. Those be interesting. Forecast to be quite low, 0.3 and 0.1% respectively. And then we do have some US dollar numbers as well. Shouldn't have too much of a major impact, but pending home sales month on month, those come through at 5 o'clock. Forecast -3 with a previous of 2.3. And then it fades off into the evening with plenty of speeches. The big ones there, you've got Christine Lagarde 7:15 and Fed Chair Powell 10:05. Those two have the potential to move markets. I don't know if we'll still be on by then. We know that in the afternoon, between 3 and about 5:30, 6 o'clock, that's the peak volume time. But there isn't really any events when our four currencies going to have a big sway over their price movement, I would say at least. Could be a wild card out there. This is Monday and we had a very volatile day on Friday. So there is potential for news to come out of the blue from a politician and potentially snap us in or out of a trade. That's all the key stuff though. And speaking of trades, let's see how our Euro US dollar is getting on. It is in a bit of a loss and the fractal is going to form as well. It went to such a high, so we really could do with seeing price come down a bit. Got a minute until that close. So that signal's not going to come. It has backed away, but we can close our Euro US dollar trade. We see the bearish fractal form, so we get out of the way. But this was a very high bearish fractal. Price looking like it's going to move on though, so maybe glad we got out of that. Could still get this pound yen signal in the next 5 minutes or so. Didn't come last period after it moved off that high. But if it pushes again, Williams percent range floating around 5 again. Also could get the Euro US dollar go back in. That's very close as well. Got to be prepared for trades on both of these. And this signal does look like it's coming on the Euro US dollar again. Needs to back off from that high to not get it. Let's measure out that risk from the bottom of the bullish fractal. 22 pips, quite an improvement on last time. And we do get the signal. Here we go, 0.26 loss. Let's sell off the market right at the top there. Already saw a bit of a shunt down. I said the pip distance from the last bullish fractal was an improvement because it was bigger. Don't necessarily know if improvement was the best word, but it's certainly quite a bit bigger. Just means a less risk for us. So I've just seen an overbought signal actually did come about 30 seconds ago. We are going to take that one. Let's measure it out quick. We're going to the last fractal down here. That's 43 pips. So let's do that calculation here, and it is 0.15 lots. Let's jump into that trade before we miss the train. They sneak up on you, take your eye off the ball for about 20 seconds, and the signal comes. Very fast moving this morning. 2 trades on each pair in the first half an hour. Hopefully this is a resistance level which price bounces off of. And it does look like we're going to get the close of this bearish fractal on the Euro US dollar pair. There it is. So we can close that off, and we do. It's for a small win, $8.84. If that was on the old volume, which is about twice as amount, more than twice amount, be around about $20, but we are happy anyway to get a winning trade out of it again. 17.86 up for the day, 45 minutes in, and we've still got this pound yen trade going. We see the bullish fractal up here, might well close there in 4 and a bit minutes. And we are getting that close of the bullish fractal here on the pound Japanese yen. So let's close off the trade. There it is. Again, another small win, another sharp in and out trade. This is exactly what we're looking for with this. Those snap reversals are about moving in, getting the start of a reversal, but also allowing us to get retracements as well. So this pound yen, it could move on now, and we're already gone. $7.14 from that one. Again, quite a bit lower volume. We had 0.15 for this one because of the distance that it was from there to there, as opposed to this one we had 0.28 because we were only measuring this sort of distance. A win's a win there, and we're happy to take them. $25 up for the day now. There's potential here for another sell signal on the Euro US dollar. The last couple of periods, it's bounced back. The RSI has been above -5. Measure out to that same bullish fractal again, just in case. Call it 23 pips, but the signal does not come. Coming at 12:30 now, and it does look so we are going to get a sell signal on the Euro US dollar if it holds out. It's about 9 pips we're going to call the risk measure. We do get the signal, so here we go. We're going to sell off the market. Back to the bigger volume, 0.63 standard loss. Now let's wait for that bearish fractal to form. 10 minutes into the trade, and we could be about ready to deploy our secret weapon. We've seen both 5-minute periods since we've entered. Williams percent range has stayed in the overbought territory. Just got to wait for that close in 5 seconds time. If it confirms it here, we'll be adding another risk to our trade. It does get there, so we sell it off. Usually with this type of move, we would have liked both candles to be like this. We did see a little bit of a red one there. Williams percent range was -4.76 and then -4.61 the period after. Now we got 2 on the Euro US dollar. If we get another 2 periods of overbought, well, we'll do the same again. In the thick of the action again, 5-1 is approaching, and we are about to be closing off this Euro US dollar trade. Does look very nice at the moment. 10 seconds to go. As long as it doesn't pounce on us, we are going to be good. But we're also getting a sell signal over here on the pound Japanese yen. That does look like it's going to come. So here we go. There's the close. We get the bearish fractal. Let's shut down those trades. Then let's go over to our pound yen. Open up a new order. You can see the risk on screen, of course. And this time, let's sell it off over here. That was the distance we measured out there from the previous bullish fractal. So 19 pips, not too shabby. But a very nice trade on the Euro US dollar we just had. $15.75 from the first one we entered. And then when we doubled down on it, $34.02 from that one. Really nice. So puts us into a good profit for the day as we see the pound yen is cracking on. If we see 2 green candles, we're doubling down on that risk. Still, on the whole, things looking okay at the moment. We're very close at the moment as to whether we add another risk on this pound yen trade. The Williams percent range left the -5 zone, the overbought territory. Looked like it was going to re-enter it, but no, it doesn't in the end, so no extra risk for us just yet. The trade's not going that well for us at the moment. They're around about $20-25 down. No sign of a bearish fractal yet. And we are going to get the signal now, though, with a big push on the pound. Williams percent range has re-entered that overbought territory. We haven't seen a bearish fractal yet, so we double down on the risk. Does look a bit shaky at the moment, though. $50 down between the trades. Even though price hasn't really moved much at all, it's about the same position it was before. We are seeing that we do take another sell trade here. That was 2 periods in the overbought territory since we entered that trade. Whoops, accidentally entered that on the Euro US dollar one. Let's cancel that one and try again over here. Oh man, booking a loss on the Euro US dollar there. What was that? $3.40. Sloppy stuff there, not checking the chart. But yeah, so you can see here, Williams percent range, 3.26. And then 3.41. So that's when we get in. Even a small red candle was going to see it out there. What a swing we've just seen on this candle right now. Price was down here and we had a bearish fractal ready to form. It was looking like we were going to finish quite nicely in profit on 2 of the trades and a small loss on the other. But that booming candle right there has pushed price up. And if it closes like that, we'll be adding another risk to the trade. Not going to get the extra added risk here. Back towards our entry price for these two trades. It'll be at least 2 candles for a fractal form, so with potentially this being the highest high. But if we see price go up, it'll be even longer. And we are about to get the close of this bearish fractal here, just a couple seconds, so let's get ready to shut down these trades. There we go. And we did actually end up in profit on that one. From the two winners, $36.86 gained, and from the loss, $28.47. Although I'm also going to factor in this unforced $3.40 error. So when we put our 3 trades and the error we made together, it's $4.99 profit. Not too bad at all, right? Did look shaky there. You can see that candle ended up making both a bullish and a bearish fractal. But to be able to take money from that, pretty good. If we hadn't been doubling down and tripling down on our trade, it would have just been a loss of $28.47. And we are sneaking in with a signal on the Euro US dollar, and this is so tight to the last bullish fractal. Not a fan of this signal, but here we go. We'll call that 6 pips there, and we will get in with 0.96 lots. That is quite a lot on there. If we have to keep doubling down with this on a breakout, it is not going to look good. But here we go. We are in the Euro US dollar this time. Yeah, definitely hoping for a range. This has been creeping up ever so slowly. Look how many green candles have come. Even that red one there, not really much to speak of. And then this pushes it in. Let's not judge it until the trade's over though. No rest for the wicked here. Just coming up to 2 o'clock, and we are going to get a buy signal on the pound yen. And that's what we're on. Let's take that signal. Measured out our risk from there. Probably a little low on the risk actually. Went for 30 pips and it was around here. Sure to be fine. Couple pieces of action coming up. First, as we go into 10 past 2, we are going to close down our Euro US dollar trade with the formation of a bearish fractal. And we also see that the Williams percent range recloses in the oversold territory over on the pound yen. So we are going to double down on our risk right here with another 0.22. This time we are on the pound yen. Got to make sure of that now. Don't want any more errors like that. $3.40. Can't be losing that kind of money. Here we go. And for anyone that missed it before, that Euro US dollar trade, that was $4.80. Not too much of a win. Could have been nicer, but we'll take what we can get, that's for sure. Quite a nice close on this Great British Pound Japanese Yen trade. Looked quite a bit nicer up at that high there, but we are certainly not going to complain at this. Let's get it shut down now, those sub trades. 31.38 and 37.58 from them. That is 68.96 total. Really nice trade. Puts us $153.52 up for the day. And it's another winner we get to plug in. And we are about to be going back in again. Yes, we are. 0.58 lots this time. Euro US dollar with the buy trade. Let's see if it pushes. The current candle run, it looks like it's the lower low. So to be at least another 2 candles after this one before we get a fractal possibility. But this one could trend with a candle like that. Volume starting to increase in the market as well. Here comes the finish of that Euro US dollar trade now. Does look like it is going to be a loss, but a very small loss for us. There's the close of the bullish fractal, so let's shut down our trade. Yeah, just $5.22 loss in the end. Not too problematic for us. Still $148 up. Good thing we got out of the trade when we did, but we are looking like we are going to get into another one just as shaky. The Euro US dollar again going overbought. No, it doesn't. It pulls back from there, so we don't see the signal come. You can see that that finished. What did it finish at? Let's close that down. 92.64, not enough to get us in. Very close there. That low certainly would have got us into a buy trade, and this is going to be a bit of a more volatile time. We see 3 o'clock turns over, New York Forex session opens, and also those German CPI numbers coming through. It's all going on. Now is the buy signal going to come on the Euro US dollar though? Quite a way until the last bearish fractal, all the way up the top there. Look at that right up there. So we've measured that out as 16 pips for the risk. We're on the Euro US dollar. We do get the signal, 0.36 lots. Let's buy the market. So we definitely got back in at a better position. This is where our buy trade was before. Now we're in another 7 or 8 pips down. And we can see CPI in Germany. This is what they wanted to see. These inflation numbers are negative 0.2% actual against negative 0.3% forecast. So they did put it a little bit more deflationary, but still nice at negative 0.2 after a 0.5% previous. Good to see that not run away. Bullish fractal is about to form on the Euro US dollar pair, so we will close that down in just a couple seconds. Let's see where we land. There it is. And there we go. So another small loss, very similar to the last one actually. $5.04 on this one, $5.22 on the previous. The high of the last candle would have seen us into a bit of money, but we don't mind small losses as long as we're picking up a couple big winners like we have done today so far. Bit of a quiet period, but now we are getting a buy trade again on the Euro US dollar. This large candle here takes us in 0.73 lots, quite a bit of volume on it. Let's see how this one goes. That looks like a well-intentioned move. Hopefully we don't see back-to-back of those come. Here comes the double down on that trade. It's got high volume, 0.73, same as the first one, and we're about $90 down on the trade. If we're not careful, this trend is going to take away all of our gains. I want to see a big reversal back up, a retracement at least. Get us a bearish fractal. If we can get out around about this center zone, have these trades negate each other, that'd be a handy situation to find ourselves in. Don't want to see red candles keep pushing and tripling down, quadrupling down, but you can get a bit concerned on reversals when you know there's volume in the market. Look at how it's increased over the last hour or so, and volume does mean more potential for an actual move. We like that wishy-washy, choppy back and forth, the European session in the morning. Here comes the close of that Euro US dollar trade. Let's shut that down. We do have one winner, one loser there. It doesn't quite balance out. We lost around $40 overall. As you can see, that first one costing us $60 and that second one gaining us just the 20 back. Could have been a lot worse, that one. It does feel like that was giving back some money. Worth noting those Canadian dollar numbers that came in at 3:30 as well. It was about 45 minutes ago. Current account actual about $1.4 billion versus negative $1 billion roughly forecast. Good beat for them there. Quite a bit of a boost on the IPPI and the RMPI month on month though. Those price indices, the industrial production products, 1.3% actual against 0.3% forecast. Not as bad as the raw materials price index, so that was 4.8% actual against 0.1% forecast, so quite a boost on there. Don't want to see prices increase too much anywhere really, regardless of where that is. Whether it's the PPI, the IPPI, the RMPI, everybody would like to see them stay steady at the moment. Just gone 5:05 now, looking at the pending home sales numbers for the US dollar month on month. Really strong beat for them. The actual was 7.5% against a negative 3% forecast. Pretty good for the US dollar, but we really haven't seen much price move on the chart here. And not just because of the home sales. In general, we haven't seen a lot of movement at all. It's been quite rangy. The Williams percent range has been playing it down the middle. So not going to take any more signals for the day from the Euro US dollar. Going to close that chart down. And we'll just give it until the end of the period. We'll see if this signal comes on the pound yen. If we do get the signal, and that will be our last trade of the day. If we don't get the signal, then it's been the last trade of the day for us already, and we'll finish things up. And we don't get the signal, price pulls back from its low, so the Williams percent range pulls out of that oversold territory. We will then call it there for the day. Not going to hang around forever to see if the trade comes. We did partake in a few trades today, 11 to be exact. That's not including where we doubled down and tripled down. Working well so far. Both charts were quite rangy today, though, particularly this pound yen we can see really did stick inside this area here. And that's what we like for it. We don't want a big trending day where we have to keep adding and adding and we're just picking up loser after loser. We want those rangy days where price just overextends itself one way or the other and we can jump in and capitalize on that. But since it's going so well, we certainly will be back tomorrow to trade another session of it. Let's just have a look at all our trades over in the journal. Journal time. Started off quite nicely. This pound yen trade coming through with $40.52 gain. Thought it might be one of these strategies that's going to go back and forth, get a win, get a loss, get a win, get a loss, and end up with more losses than gains along the way. But not what it's looking like so far. Really came well for us. And focusing on some of these trades where we doubled down and tripled down. So here, for example, we doubled down, made $34.02 on that trade alone, $36 off the double and triple down here, $38 off this one. Haven't taken a loss yet on either a second or third trade in the pattern. So that has proven to be quite delightful for us. And so on balance of these trades, 7 wins, 4 losses, but 2 of those losses were very small, $5 a piece on the Euro US dollar when that trend started going there. We did get called out for a bit more against it right towards the end of the day, but still kept us in profit. We started at $5,668.65, and after day one, we're on to $5,772.49, $107.24 gain from the trades, $3.40 for that unforced error I've just logged there. It is $103.84 to the good. And so we're looking forward to trading this one tomorrow for hopefully even more gains.